Hello guys, my name is Colin and this is Colin Talks Crypto. I have something very interesting to show you guys. You know, I love posting the bullish news, but I have to cover all angles, and it's important to you, my viewers, to keep you informed of everything, not just the bullishness, not just the Moon Boy news. And so in this video, I'm just going to cover something very fascinating. Right here you see the Bitcoin price chart, and there's three lines on your screen right now. There's a blue line, an orange line, and a pink line. The blue line is a 200-day moving average line. The orange line is a 100-week moving average line. And the pink line is a 200-week moving average line. Now, these have various significances over history for Bitcoin, but one I want to pay close attention to right now and show you what I just noticed is this orange line, the 100-week moving average line. And I think you'll find this very interesting. So Bitcoin just broke below the 100-week moving average line. You can see it right here. I circled it in orange color. And it hasn't closed. The daily candle has not closed yet, so it's possible that it's just a wick below this. But as you can see, we're definitely trending toward this line. This line is becoming very important. And we actually did wick below it. And that has not happened anywhere on this entire chart here, not anywhere in 2021 or even late 2020. We have not wicked down below that. The last time we dropped down below this 100-week moving average line was the COVID crash, believe it or not. That was the last time we actually dipped down below this moving average line. And there's some significant times in history that correlate to this particular trend line. And that's what I want to show you right here. Take a look at this curvy kind of pink line. That's the same 100-week moving average line that you saw on the other chart in orange. And what do we notice here? Well, first of all, we've just touched this. And like I said, the COVID crash is when we dumped below that. And right here after the $20,000 price peak back in 2018, when the volatility was really flattening out, things looked like they were really condensing, and we looked like we were getting ready for the bottom of what we thought was a bear market. And then what happened? Boom, we dropped down below this 100-week moving average line and collapsed the price all the way down to, if I recall correctly, about $3,300. We went from about $10,000 to $3,300 in a very short matter of time. And that all coincided with breaking down, indicated by this little hammer here, below this 100-week moving average line. If we go back even further in history, we saw that we actually broke down below this around the $400 price range. And again, when we had hit the all-time high, and then we had moved beyond that in time and broken down below that 100-week moving average line, we then plummeted down rapidly. So you can see here another hammer icon indicating that. So I wanted to bring this to your attention because it is a very important line in terms of technical analysis. In terms of staying above it is very bullish, and going down below this line is very bearish. So let's zoom in on this. Currently we're viewing the daily candles. And I'm going to turn off the volume, the trading volume, just so we can keep this real clear to see here. And again, it's just a wick down below this, but it's darn close. In fact, actually right now, at the moment of recording this, it actually is currently below the 100-week moving average line. You can see it right there. It's really just on the precipice. It's the second day in a row that it has wicked below this line. And again, that hasn't happened anywhere on this chart except for back at COVID 2020 in March when it crashed. So it's been a long time since we've been above this line. And dropping below this historically has been quite bearish, unfortunately, as pictured by this chart. Also, while I'm showing you these particular lines here, this 200-week moving average line historically has been a great time to buy. Back in the COVID crash again, it dipped below this line very briefly, and that would have been a tremendous buying opportunity. Imagine having bought here at $5,000 and you'd be in profits pretty much forevermore. The previous time before that it dropped below this 200-week moving average line, this pink line here, was back in, it looks like around February or December, around late 2018, early 2019. Only two times on this entire chart here, and this entire, looks like I'm viewing about 3-year time span that it has ever dropped below this pink line. But similarly, it hasn't dropped below this orange line very often either. And every time that it does, it's been generally pretty bearish. Anything's possible. This is not financial advice. I'll just tell you what I have done though, personally speaking. As I mentioned in my last video, I actually do have some cash on the sidelines. It's not to say that I'm necessarily bearish or bullish, but I do look at the chart in front of me and I do see what's happening here. And to be 100% allocated in crypto, I think would be irrational, because in my mind right now, I could see us in a 50-50 scenario. 50% chance we dip down, shoot back up, and go to a new all-time high. Sure, that's possible. But I think it's just as possible that this, as piddly as it was, 3.5x over the previous $20,000 price peak, may have been the top. And I'm not going to be so blinded in bullish bias to say that this has no chance of being the top. Now, yeah, it would be a different kind of top. It was a very rounded, non-blow-off top. This one had very low volume. It was a really weird cycle. But hey, cycles will rhyme. They're not necessarily going to repeat. And this cycle definitely had some rhyming elements, but it's definitely not repeating. So that's why right now I have about 15% of my portfolio in stable tokens. I'm personally enjoying that sweet 18% Terra blockchain earn rate on my Anchor deposited UST. I have a little bit of other stable tokens, but predominantly it's UST because I want that passive income and I want that interest while I hold my stable tokens and I wait for a re-entry point. Now, it's also worth noting, as the glass half full would be, that we do have higher lows continuing to be made here. Even with this recent dip down to $35,000, it's still a higher low on the general trend of things. So that's why I say it's 50-50, like 50-50 bullish, 50-50 bearish. I could see it going either way at this point because we're still on an uptrend. As fearful as the current moment may feel and is, we're actually still up. We're up from where we were on the low of February. We're up from where we were on the low of January. We're up from where we were in July of last year on the low. We're up from the low of June of last year. So we're actually up. You can actually draw a line through these bottoms right here and create an uptrending trend line on these bottoms. But I don't want to be blinded to the fact that we did just double test this with a wick, this 100-week moving average line. And so I'm just proportioning my portfolio a bit in relation to how I see the odds playing out. Like I said, I think it'd be foolish to be 100% in crypto right now because I don't feel there's a 100% chance that we're going up. In fact, I give it a 50-50, something like that. So I guess you could even say, why am I not 50% in stable tokens? I guess to be completely honest, it's because I do personally have a generally bullish bias with crypto and I don't want to be caught out of the game. And I generally err on the side of holding too much crypto rather than too little crypto. That's just my nature. This is Colin Talks Crypto. I have a bull in my logo for a reason, but at the same token, I do have 15% of cash on the sidelines because I want to be able to take advantage of some deals. Let's say that the price drops down to here. Let's say it drops down to 28 or 29,000. I don't know if it'll go as low as this 200-week moving average line. I personally don't think so, but again, if we're in a bear market and the next bull run top we're going to see is in 2025 after the 2024 halving event, then probably what's going to happen is we're going to see some moves like this, and then we're going to touch this line at the bear market bottom, and then we're going to start working our way back up. So it's all relative to what happens here. That would be the bear case scenario. That's the 50% bear case scenario. The bull case scenario is we capitulate rapidly, we drop down to 30,000, 33,000, 28,000, somewhere in this range. And then we shoot back up rapidly and we regain our position and we start heading toward new all-time highs quickly. That would be a little unusual and unprecedented, not to say that it can't happen, because if we were to make a new all-time high, let's say in late 2022 or early 2023, that would be weird because it would be a bull run peak where there's never been a bull run peak before. It would be right in the middle of two cycle peaks. Normally, the peak occurs late in the fourth year. Well, this would be like 2 years into the next cycle. And then you fast forward to 2025 after the 2024 halving event, and we're going to have another probable run up from that supply restriction when the issuance rate gets cut. So I find this scenario very interesting. If we were to make a new all-time high after a massive capitulation event, shake out all the weak hands, shake out all the leverage, and then start our way back up rather rapidly, it will definitely bounce up and down on that way up. But that would just be a very interesting scenario. We would actually end up having 3 peaks, all relatively spaced out. So what do you guys think? Do you think that that is a likely scenario? Do you think that that's a more likely scenario than this just being the top and heading down to a bear market bottom and then starting our corrective cycle back up to the new bull run peak in 2025? I don't know, guys. I'm not trying to be bearish here, but I'm looking at this stuff like testing this 100-week moving average line, and I'm thinking that there's at least a 50% chance. If you don't think that there's at least a 50% chance of this being a bear market correction, then I think that you may have your head in the sand a bit. You may be a little too bullishly biased, and all that will happen is it may hurt you in the end, and it may hurt your pocketbook. You don't want to be so blind to the possible outcomes that you don't take a look at this. This 100-week moving average line is tremendously important historically. It has indicated the past major drops, the major capitulation events. You can see it here. It dropped from, really from 6,300. It hit this 100-week moving average line around $5,700 and then went all the way down to $3,100 in a span of about 1 month. Just to give you a time frame for how long something like this can happen. About 1 month from the time it broke down through the 100-week moving average line until it actually bottomed out. And in this case, actually touched this 200-week moving average line, which is historically the actual bottom of the cycles. COVID was a little bit of a black swan, so it actually went below that 200-week moving average line. But in my opinion, it's always safe to be buying and accumulating in this range here when it hits this 200-week moving average line. And so let's zoom in on this particular COVID dip below the 100-week moving average line. In this case, we actually broke through all 3 different trend lines. That's how much of a black swan this was. We broke through the 200-day moving average line, which started off the capitulation. We plummeted down, straight down through the 100-week moving average line. And then we even went through the 200-week moving average line, all in a very short span of time. And so we went from $9,000 all the way down to about $3,800 right there. Pretty crazy stuff. So what's going to happen this time around, guys? I don't know. I can't tell you. I can't see the future. I'm not a fortune teller. But all I can say is that this is looking like a setup. It could bounce off this line. But if it breaks down below this line, I just want you guys to be prepared for that outcome of a potential capitulative drop. And like we just saw, it could take a month to play out. So I'm going to be holding on to my stable tokens for like at least the next 4 weeks, being ready to capture and buy some more crypto when it bottoms out, because the name of the game is holding more crypto and accumulating. So that's just how I'm looking at it currently. I'm ready for this drop. I'm also ready if it rebounds up, because I do hold a lot of crypto, 85% crypto still. So if it heads up, I'm still happy. But just do this thought experiment for yourself. Ask yourself, if it crashed down to $28,000 in the next 4 weeks, would you be mad at yourself for not having any cash on the sidelines when you could have taken it? Just ask yourself that. And then ask yourself what odds you give this outcome having. And then maybe you want to take some cash in proportion with the odds you see this outcome happening. I'm not saying you have to think it's even the predominance chance of happening. But if you think it's even more than a 25% chance of dropping, then maybe you should have a little bit of cash, just a little bit on the sidelines. Or if you think it's the likely outcome, I'm starting to think it might be the likely outcome here, then you might want to have a good chunk of cash ready, unless you just want to hold through the whole thing and not pick up any deals. And just so you don't feel bad, it's not just Bitcoin that is taking a beating lately. If you look at the year-to-date performance for the Dow Jones, it's down 10%. If you look at the S&P, it's down 13%. That's just from the beginning of this year. And if you zoom out to the 5-year chart, you can see that it's definitely rounded the top here, and we're heading down, but we haven't really gone down that far. And my main question is how far is the stock market going to go down? Because unfortunately, and like it or not, Bitcoin is a correlated asset. I think that it's definitely going to end up being uncorrelated eventually in the future. But as of the present, it is, unfortunately, in my opinion, still a correlated asset to the stock market. If the stock market tanks, just like you saw here in the COVID crash of 2020, well, Bitcoin crashed as well. We just saw that. So Bitcoin follows the stock market, like it or not. That's the facts of the matter. I think in 10 or 20 or 30 years, it's not going to be the case. But right now it is. So the question is how far down is the stock market correction going to go? Because that's probably a clue for how far down the Bitcoin price correction is going to go. And you can see a similar thing here on the S&P 500. Similar rounded top and downward trajectory since really the end of last year. We've really been down since the beginning of this year. Now, this is an interesting cycle. Let's step back a little bit. We'll talk about CBBI here just for a few minutes and then I'll end off. But this cycle was interesting because it was not a blow-off top. And one thing I want to show you guys is CBBI, the Colin Talks Crypto Bitcoin Bull Run Index. This is a way of analyzing 10 different metrics to take a look at how close we may be to the top and how close we may be to the bottom. Historically, this blue line, when it reaches below 10 or so, that means that it's a good accumulation zone. When the CBBI confidence score is below 10, it's time to buy. And when it's above 90, when it goes 90 to 100, then it's a good time to sell historically. This is an oscillator type of metric. It oscillates between 100 and 0. And so it makes it sort of easy to decode where we may be in the cycle. Now, it's looking more and more like we're in a bear market cycle just based on even the CBBI. But one thing I want to note here, guys, and this is kind of the takeaway, is that it did not indicate we were at a blow-off top here. And when I thought about this a little more, like, well, what if this was the top? Why didn't it indicate it was 100? This would mean that the CBBI was wrong. And I thought about it, and the reason it's actually not wrong is because CBBI is a blow-off top index. Every algorithm that we put in place to decode these 10 different metrics all looked at the past blow-off tops. So it actually makes complete sense that it did not indicate this as a blow-off top because it wasn't a blow-off top. If anything, you could say that the CBBI is acting perfectly. It indicated that this was not a blow-off top. So guys, I know that doesn't necessarily help you because you're thinking, well, I want to take profits and 4 years is a long time to wait. Well, this index has a particular purpose. It's a blow-off top index and a bear market index. So what I think is going to happen is because the last price peak that we saw was so wimpy, this $69,000 and $64,000 peak was only 3.5x over the previous bull runs. We'll turn off the CBBI line for now and just look at the Bitcoin price line. So here's the $64,000 and $69,000 price peaks. They were only a 3.5x over the $20,000 price peak. Now that's unprecedented in how low it is because the other price peaks were like 17x and 30x and things like that. This was ridiculously low from here to here in terms of gain. And because of that, I think what's going to happen, this is my prediction, is that regardless of whether we hit a bear market low here or we bounce off and we go to a new all-time high, whenever we hit the next peak, be it in late this year, early next year, or all the way in 2025, we are going to see a massive blow off top. I think it's going to make up for the fact that the gains on this one were so little. And I think especially in the scenario where if this does turn out to be an actual bear market and that was the top for this whole cycle, and we go all the way to the halving event in 2024, and then there's the next peak run up about 3 to 6 months after that historically, I think that that particular case will be a massive, massive blow off top because we didn't see it here and this was such a piddly gain. Sure, there's diminishing returns, but diminishing returns don't mean you go from 30x to 17x to 3x. It means you go from 30x to 17x to like 9x. So this one's short. And I think that that means we're going to play some catch up when it comes to the next bull run. So let me know in the comments where you think the next peak's going to be. Do you think it's going to be later this year, early 2023? Or do you think it's going to be all the way after the next halving event, 2024, 3 to 6 months later in 2025? Do you think that that's where we're going to see the next peak? Tell me what you think is going to happen in the comments below, guys. And pay attention to that 100-week moving average line. If we close below that line, I would say brace yourselves and get ready for impact. Be prepared for all outcomes. That's all I have for you today, guys. Take care and have a great day.